I'm ready, baby.
All right. Hello, hello. Abel Pacheco here. I'm the president of Five Talents Commercial Real Estate. And welcome to the Mission of Multifamily Fund offering memorandum walkthrough. We're super excited you're here. We have a Regulation D 506C investment. This is for accredited investors only. And this is an impact investment. We're really focused on leaving a positive impact along with financial returns. So we're excited. So we'll dig into this a little bit and kind of dive right in here. Forgive me, I'm going to go back and forth between a recording and the slides on this side. So thank you. But this is a picture of my partner Ellis. I'm going to introduce him in a minute. And before we get into introductions, if you don't know what an impact investment is, these are investments that are into companies, organizations, funds. Really, they generate social or environmental impact alongside a financial return. So we're pleased to announce really one of the first of its kind, an investment opportunity for accredited investors. And this is, our opportunity. We are putting together a fund of funds model. So the mission of Multifamily Fund, this is the first one. It's an impact investment that'll provide a premier institutional grade offering and an opportunity into the WayMaker Fund. And this is an opportunity that today our fund will be invested 100% into the WayMaker. We'll explain further, but it's at a high level, it's a value add multifamily real estate fund. And their fund is essentially for some, very high net worth individuals, people that have the ability to invest at a minimum $1 million into their investment. They're targeting a total acquisition of about anywhere on the low end, $150 million worth of multifamily assets to $500 million. So anywhere from 15 to 40 properties in the 20 to 40 million range. They're doing that over the next 5 years. And for us, it's an opportunity to invest in this, reach the $1 million minimum, and be in their investment. And their exit strategy, one of which they have a few, but one of their exit strategies is to sell to a REIT, which is a real estate investment trust. And we are owners of multifamily. They will sell, them or exit individually or to a REIT. And so we're really excited about the opportunity. It's an opportunity to give our investors the access to this amazing fund at $50,000 minimum, not $1 million minimum. So let's talk about WayMaker. So what type of investment is WayMaker? What is this fund, right? It's really an institutional portfolio that's going to be comprised of apartment complexes or multifamily properties. Think 200 unit plus assets. So very big, B to B plus, maybe a low A, and this is 1990 vintage to 2010 properties. So fairly new, that are ranging in that 20 to $40 million size. And they're assets that we would all want to buy as individuals, but they're buying many multiple assets, again, 15 to 40 of them. And they're going to be doing that over the next 5 years. So that'll total 150, on the low end, like I said, to $500 million. And they're going to be buying these assets in what they're calling the Fine Nine cities. So these are the US's 9 top submarkets or markets in the Sunbelt cities, or in the Sunbelt area, which is one of the fund's superpowers at a high level. It's diversification on diversification, right? We all want a stable vehicle to invest for preservation of capital, and multifamily's proven since 20, or especially this year, it's proven for many years, but during COVID, that it's one of the highest performing asset classes, even during this time. So we're excited to be in it. And the portfolio like this, at a high level, you want to have the right market, the right team, and the right operators. So if we have the right assets in the right markets, lastly, who's going to operate all this stuff? That's really what with the key elements of this opportunity, which it is being managed by the number one and the number three largest operators in the world, literally global operators. If you heard of Greystone, you heard of Pinnacle. Both of these, entities manage like 862,000 doors under their management. They have about 23,000 employees, and they are global entities. they have, to say that they have the breadth of expertise is kind of an understatement. They're basically the largest operators there. And, the fund, I would say that the other good part about the fund, we talked about impact investing. So we are in it for financial return. We do want to make as much capital as possible, increase our net worth, get some tax deduction along the way. But we're also we're also have the ability to provide a nonprofit, which is Apartment Life, 15% of the general partner slice of the pie. So Apartment Life is a nonprofit. They recruit, train, manage coordinators within a community. So think, an individual or a team that's on site that lives on the property, and they, what do? They help us manage the community. So think all the things that we would want to do as operators, as an individual and owner. We'd want to have community events. We want to have holidays, social parties, and then, because it's a faith-based nonprofit, they're also doing things like having church or Bible studies and things like that. So it really does have multiple different facets to this impact investing, financial return, and also the faith element, which is really awesome. So if you don't know, myself and Ellis very well, we'll introduce ourselves here shortly, but we are really serious. If you go look on the internet, find us, our podcast, a little bit more about, our social push, you'll find we're serious about helping others. We're serious about giving back. We're serious about our faith. And this is an opportunity that checks a lot of the boxes, help our investors increase net worth, increase the wealth creation, and at the same time, further the mission of Christ, which is really awesome. It's just, all around good opportunity for us. We're excited. So let's explain, or let's, talk about Ellis and myself. Oh, after this transparent investor friendly funds. Hold on one sec. Sorry. Who are we, first of all? We are Ellis Hammond. I'm going to let him introduce himself. And then my name's Abel Pacheco. Ellis, let me turn it over to you for a minute. How about an introduction, and then we'll get into some terms.
Great start, Abel. Great start to this. Really excited about this fund. Yeah, you mentioned our goal is to provide an amazing opportunity for investors and also have a tremendous impact. And I just want to reiterate that I think most people think that, you have to trade one or the other. It has been my mission for the past, 24 months to find wealth building vehicles that can do both, that can create massive impact while also creating, amazing returns for investors. I think it's the really intersection of both of those things that this fund really brings together. And the reason that's important is kind of my story really quickly. Today, I'm the founder and manager of Hammond Equities. I'm a full-time multifamily real estate investor. We have a community of over 200 investors looking to place capital across multifamily deals. I'm also the founder and host of a mastermind community called Kingdom REI, where we have over 40 commercial real estate operators managing over $2 billion of commercial real estate. But my story in the past was I was a missionary and pastor for 6 years before really launching Hammond Equities and becoming a full-time investor. So it's really exciting to be able to bring this offering to you today and to be a part of this. So excited to kind of get into this and show you exactly what we mean by this idea of really having influence while building wealth at the same time.
All right. Thank you, Ellis. And again, Abel Pacheco, hopefully most of you know me, but for those that don't, as I mentioned, founder and principal of Five Talents Commercial Real Estate. And I am a real estate investor for the past 12 years. We are invested in commercial real estate, about $93 million of it. We have investments in about 800 doors. I'm a passive investor. That's what I have done for years. I'm also an active investor, so general partner and principal in about 500 out of the 800 doors. So excited for the opportunity to invest in diversification on diversification is why we're here. But a little bit about me: I'm from Corpus Christi, Texas. I grew up at the beach, and I've lived my adult life after I went to from Corpus to San Antonio, Texas. Graduated from UTSA. I worked in tech for like 13 years. And I led, my largest team was probably about 60 people. We went from $5 million to $57 million a year. and have transferred that kind of corporate professional success over to real estate now as well. So that's a little bit about us. We're the fund management team. So just like any other normal syndication where operators are operating the investment for 120 unit properties, well, 100, 120, 200 unit, whatever the number operators, well, we are the fund managers, and Greystone Stone and Pinnacle are managing the property. So let's talk about basically the terms here. Sorry. We wanted to make this as transparent and as friendly as possible. And so we want to jump right into the returns for this investment, put it right up front so we don't have to wait till the end. We'll kill some of the suspense. This is the projected returns, and we are putting together the fund that has an 80-20 split. So 80% for the investors, you guys get the lion's share, and 20% will go to the fund. It is a preferred return with 100% return of capital before the equity split. So we very much set it up in favor for the investors to make as much capital as possible. It is a 506C investment. So the SEC regulates us. We get an exemption from them. And we are putting this together for accredited investors only. You have to be accredited to participate. You can get a letter from your CPA or go to a verification source. We can help you with that later. And the minimum investment on this is $50,000, right? So WayMaker's investment minimum is $1 million. We are essentially raising funds as our syndication and going to meet their minimum of $1 million. So we have access to it with a very low $50,000 price point. So that's perfect. We are going to do quarterly distributions. WayMaker pays our fund as a limited partner. Our fund pays you on a quarterly process. We do have a 2% capital placement fee on investment. So whatever amount that's out there, 2%, and then a very low management fee of 0.75%. Again, we wanted to make it very simple to understand and know how all of our investors are going to get paid.
And Abel, really quickly,
yes,
one-time 2%, so people aren't confused. That's a
Mhm.
one-time 2% capital placement fee. That's how we pay the bills on the fund. And then the management fee of 0.75, again, which is incredibly low, is an ongoing fee based on the amount of capital in the fund. So just so we're clear on that. So one-time 2% management fee is ongoing.
100K goes in, 98K gets invested.
Absolutely.
All right. So our funds are being invested into WayMaker. So what are WayMaker's fund projections? And we'll dig into a lot of detail here, but at the highest level, it's a 2.3 multiple in 7-year hold is what they're projecting. And much like, everyone else, we want to say 7, there's opportunity to exit earlier, but I would say only invest the money that you feel comfortable investing, that's going to be invested for 7 years at a minimum. If it sells earlier, then great. But it's a 2.3 equity. There is a cash flow that averages yearly at about 6%. The proposed LTV or leverage on the opportunities. So every property we buy, instead of a loan to value of 80%, which is pretty traditional, to get as little money in as possible and to leverage as much possible from the bank, we are WayMakers staying very conservative and buying assets at 60 to 65% LTV, which essentially brings the debt service coverage in a very favorable number for all of the assets to make sure that the entire fund is very conservative. And they've modeled a couple different ways. As we dig into this, we're going to explain this, but on a minimum, they put a very low conservative return projection at 10%, and it ranges all the way up to 17%. So on a low end 10, on a, everything goes well, exactly as planned, 17%. Now, these are without these tax credits that we are potentially going to be able to take advantage of. Because there's a nonprofit in the deal, there are certain submarkets that get a nonprofit based tax credit that eliminate 50% to 100% of taxes on these investments, which juices our return from 18% on the low end all the way up to a potential 33%. So we wanted to show you kind of that, just the conservative underwriting as well as the potential, which is really exciting for us. So, let's dig in through this process. If you are interested at the end of this investment, you can reach out to Ellis or myself, Abel Pacheco or him directly. And essentially what you're going to do is you're going to make us a commitment, a soft commitment. You'll tell us, hey, I'd like to invest. We're going to send you over the offering memorandum or have the subscription docs. You'll review those. Once you're ready, you'll electronically sign the agreements. We're going to countersign, and then you fund. The first funding deadline for the end of the year is December the 23rd. Ellis, perhaps you could describe to like how our money goes in, how quickly it goes to work. And, we're recording this on November the 21st, but if there's somebody that wants to move immediately, it gets working immediately.
Yeah, so we essentially have two deadlines. We have the end of November, the end of December, right? Because that's when WayMaker will essentially call the capital. So as soon as WayMaker is able to call the capital, we can place that capital with them. Even though there are no properties in the fund as to date, your returns will begin to accumulate. So, essentially, if you're listening to this and you want to invest before December, then your money can begin working December 1. If you're watching this after December and you need to get your money in before December 23rd is our deadline here, your money will begin to work and start accumulating returns starting January 1 is how that works.
All right.
And again, so you have till the deadline, but to be clear, our fund, Mission Multifamily Fund 1, is capped at $5 million. That's as much as we're raising inside of this fund. So up until the deadline or until we have raised all the funds that we needed.
Yeah, even though it's a fund, it is still first come, first serve. So capital comes in, it gets full, then that's essentially the deadline. It's open till it's closed. Okay. So let's talk about WayMaker, right? Digging in, what are we investing into? I'm going to really turn it over. Ellis, explain in your own words, like what is WayMaker's faith, their impact, a little bit about them. So we know this, and then we'll go through these slides.
Yeah, I'm so excited about being able to partner with these guys. I mean, this is a dream team of folks, and their story is pretty unique. And we'll show you their investor committee here in just a few slides, but the principals and the investor committee they brought together, first of all, is best in class. I mean, we're talking about CEOs and founders, presidents of the largest global multifamily operators out there, right, that have come together for this. And the way they've all come together is because they've all sat and served on the board of Apartment Life, which is this Christian-based nonprofit, which is also why they're giving 15% away of their GP to Apartment Life. And so their story is really unique and really cool in that they all started with a similar background of their faith, and they've come together to put together really a once in a lifetime type industry opportunity in the world of multifamily. And so the way that I've got, really you're getting access to this because of your connection with me and Abel. That really is the only way that smaller investors will be able to access this. We are the only access point into the WayMaker fund at a 50K minimum. Everyone else inside of this fund will be placing over $1 million. They also have commitments from mutual companies, faith-based mutual companies at the size of $10 million. And so just want to give you the confidence that you're investing alongside of folks who are placing up to 10 million or more into this fund, and we are the only access point at the 50K. So really cool opportunity here. And again, their vision, as we'll show on the next slide, Abel, if you just click down, is to build a Christ-centered, publicly traded multifamily REIT that provides exceptional risk-adjusted returns. And so this is the opportunity that we're really excited about being a part of, and that we're going to be acquiring multifamily assets alongside of using Apartment Life, which is a Christian nonprofit, with the potential to sell this entire portfolio to a REIT, which will tremendously benefit you as the investor. Because if we sell to a REIT, there's typically like a 10% premium in being able to do so. And I would just say why this is so different from a single syndication is that typically when you're investing in a single syndication, that team does not have the ability to go and sell their portfolio to a publicly traded REIT because they just don't have the resources. And the team that we're investing alongside of has, as we'll show these slides, the best legal team, fund managing team out there to be able to pull this off. And so this is the opportunity that we're excited about being able to provide.
Yeah, that's awesome. So yeah, if you can continue, Ellis, to why multifamily? Why right now?
Well, I mean, as we're in the middle of COVID-19 and we've seen how this has just tremendously impacted the commercial real estate market. But yet, as we have seen also that multifamily numbers continue to be very strong. And as a matter of fact, one of the principles of this fund in WayMaker is he actually works for a company called RealPage, where they are one of the leading providers of data for multifamily real estate and have shown that across all the assets, even in multifamily, so multifamily perform the strongest, but B class type multifamily has performed the strongest in the categories of multifamily. So we're investing into a great asset class as we look to the future. And the reason that is again, you think about uh, what B class means. We're talking about anywhere from $900 to really $1,400 a month type rents, really, which is most of America, right? It's middle class, America affordable rents. And so that's what we're talking about. Here's some stats here. 67 in the United States lives in apartments at some point in their lives. The demographic trends are highly favorable. Again, we're investing in the fine 9 cities, which are the leading cities in the country in terms of population growth, job growth. So we're buying where people are moving to. And again, they need places to live. And so that's why multifamily and essentially this fund is so powerful.
Perfect. Yeah. So um, a lot of these cities that Ellis is talking about will cover it as individual, but they individual cities, but also they are, very strong policy based. So unfortunately, some of the cities or markets in the kind of call out California, maybe New York, and a little bit, they're not quite going to make it into this investment. But for those favorable for investors like us, they did. So it is. It is an amazing opportunity. So we won't read these bullets. You can go through them on your own. You'll have the slide deck, and let's talk about this dream team a little bit as well. So we have, the approach is essentially, have the right team. You can source the deals at the best, most favorable basis. So low price as possible with a unique value add strategy to force appreciation up, and that's what's going to equate to significant returns. Now, this double bottom line impact is one, a financial return, but two, how to improve the lives of others, which makes it, an impact investment. So who's leading this team? We keep saying, oh, this dream team. Well, it's as Ellis mentioned, a once in an industry opportunity. And so this dream team is like 4 components, basically. It is the investment committee, the operating partners, the ministry partners, which is Apartment Life, and then amazing legal and administrative teams. So these all 4 components make up essentially the foundation for the individuals that are going to help run the opportunity. So as an investment committee, there may be some names you recognize here. If you don't, I'll give you the high level. Publicly traded, large Fortune, 500, 200, 300 entities. These are the kinds of names and companies that are here. You'll see CEO of Pinnacle. You'll see managing director of Greystar. You'll see the deputy chief economist for RealPage and RealManage. I would ask you to go to the internet, Google some of these companies. You'll see just by their way, they are the largest entities in multifamily. So we're not talking about an individual investor that's had a great track record for 5 or 10 years. We're talking about industry leading experts that create the REITs or other, entities like this that manage across 862,000 doors. These are the people that are that are leading the opportunity, which is really why we say this is an industry, an institutional grade investment at a $50,000 mark, which is just really unheard of. So we're excited to be a part of it. So this is their, some data points. Ellis, you actually know pretty well the individuals that we're working with. I don't know if you want to read some of these bullets, you definitely can. And don't
We
want
just
to prolong it too much.
again, I mean, we're talking about for $50,000, which is a very low minimum, you're investing alongside best in class.
Yep.
So, as far as in terms of what our investor committee represents, here are some of the numbers: a
And I'll see
million
this.
being managed, 2,000 multifamily transactions, $100 billion portfolio. So, just so we're clear on why these numbers are important, because it's experience. It's because when we get into a bind, when things don't go as planned in these properties, we want to make sure we're investing alongside our capital is not just backed by strong assets, but by an experienced team. And so this is really what that slide means.
Yep. And you can see Greystar and Pinnacle on this as well. They're individual, plenty of employees, plenty of team members to help us. And I'll cover this when we talk about off-market properties. This is how they're finding those properties. So it's exciting. And then Apartment Life. So, I've had some experience with them through Kingdom Capitalist, some of their employees as well. But Ellis, you know Apartment Life pretty well. Maybe you can talk about their, what they do and their mission and how it impacts like even the bottom line, right?
Yeah, absolutely. So I interviewed the CEO, Pete Kelly, on our podcast, King Mari. I encourage you to go check out that. But Apartment Life is a Christian-based nonprofit. But surprisingly, they work with operators all across the country, regardless of their religious affiliation. The reason is because, really simply, and I hope you see this in this fund as well, is that being a good neighbor is also a good business model, right? Like helping people, it does not mean it doesn't add to the bottom line. And so what Apartment Life has proven over the past decade and working with, as you see, 1.3 million apartment units, is that if we can connect people in relationships, and then that leads to the reduction of turnover in terms of people moving out of the apartments. And that can create what they've proven is about $120,000 to $180,000 to the bottom line of these apartment communities. And so when we're investing into an area, let's say with a 5 cap rate, that's over $3 million in net worth, or in equity back to the project. And so, again, Apartment Life is a strong organization, has incredible metrics in the people that they're impacting, the lives that they're changing. But again, like there are many, many apartment owners, regardless of the religious affiliation, that are using this organization simply because of their programs inside the community that add to the bottom line.
Oh yeah. Yeah, absolutely. Less turnover. Turnover is one of the most costly parts of multifamily. And if you have less people moving out, they're going to stay longer. And in our IT profession, we used to do the survey because we're big on culture. Send out the survey, and the survey had a couple questions. One of those questions was, "Do you have a best friend that works here?" And when we checked yes, they knew that was going to keep us here in seat longer. Same thing with the apartment community. So yeah, that's awesome. And legal, obviously the legal fund managers and asset managers. So people watching the data, watching the stats, watching the projections, looking over it like a hawk, basically. And then people managing their fund, the financials, the distributions, the returns, how this all comes together. And then obviously some of the top CPAs as well. So these are people that are supporting, right? Nobody does this without the expertise. We've got some of the top expertise areas, or WayMaker has them, and we are leveraging them as well. So let's dig into the actual business strategy. Like how do we take, or how does WayMaker take, $500 million in assets, and how do they turn it into $1 billion worth of assets with enough time? So it's essentially these, few bullets. So they're taking 9 of the top cities, the fine 9 Sunbelt cities, top suburban markets, apartments that are 10 to 30 years young, class B plus properties without asset optimization, and they have a very poor online rating. And this and every apartment without Apartment Life. So they're not taking advantage of a community enhancer. They have poor reputation. And then most of all, that's all on the right-hand side. On the left-hand side, when you look at the summary slide, it's just essentially telling you one of the things is we're going to be buying off-market properties. So when you have a Greystar and you have a Pinnacle and you have some of the who's who in the industry, you also already on like working with all of the operators in the United States which means you have a lot of the network and relationships established to buy off-market properties, which haven't gone to the brokers, which haven't gone out to market, which haven't pushed the price up. Oh, WayMaker's still talking to the brokers. However, even at that area is to try to buy them before they get mass marketed, which is enabling us to get them at the best possible price. So that's kind of the key to this core strategy. Anything else on this buying methodology, Ellis, that I left out?
No, I would just say quickly why online poor reputation is so important. They've proven that if on Google, for example, if you have less than 3 stars, it's 50% more costly to recruit a new resident to your community. And so again, that's why this is so important, because again, the numbers show that if you have a better reputation online, you can save 50% in acquiring potentially new people into your community. So it's all of this is backed by numbers. All of this adds to the bottom line. It's massively important to our investment.
Yeah, that's awesome. Yeah, if you're an operator and your marketing line item is a big line item in that budget. So this kind of summarizes again the same information that we're talking about, and has it here. At the high level, there's 2.7 million units though. To kind of give you an idea, so 15 to 40 properties that are 200 units plus. You may say, well, how are we actually going to find that many? It really represents less than 2% of the available market. So the total addressable market, 2.7 million. We're looking for 2% of that, and which is very doable for WayMaker. And the unique value add strategy. Let me move this a little bit. So the slide is broken up in the left-hand column is what where the return is coming from, what's going to happen on this the left side. Your traditional value add is when we're buying a single apartment complex, we're increasing the net operating income by forcing the appreciation up. How do we do that? On the right-hand side, WayMaker is showing you how WayMaker does it. So let's go through the middle, traditional value add. As a single apartment complex, we may buy it. You may have a low end $5,000 unit turn. On a high end, you may have $10,000 per unit, which will pay for floors, the surface, countertop, the new appliances, the cabinets, front ends, anything that's not shiny needs to be fixed, the toilets, the tubs, all that stuff. That's a unit turn. I do the whole entire thing. Maybe that cost me $5,000. Maybe it cost me 10. On this model, WayMaker's doing it a little differently. So they're accounting for $1,000 to $5,000 because they can implement a different strategy. So when I'm turning units, if I had 100 units, the execution strategy, the execution risk, sorry, is a little hard. It's subject to materials, available resources, my timing, my project management, my availability of contractors, how to get it all done. Can I do it all at once? Not really, because I have people living there. So it's a pretty elaborate structure. And as you can see on the right-hand side, WayMaker is going to increase net operating income because it's going to drive value up in a different way. We talked about apartment life. We talked about real page and real management, bringing a data-rich asset optimization strategy, which leverages technology into visibility and awareness of what's happening. In short, numbers watched are numbers improved. And when you have the tools, tool sets, and the capabilities like Graystar and Pinnacles convert on that data, you can increase your retention. So renters staying with you. You can increase the length of time that they're with you, the number of turnovers. The apartment life is going to increase increase again retention as well. The community, reduce vacancy, and people that enjoy living in a unit are going to pay more. And we're only buying B and B plus properties. So don't think a C asset or a rough property, B plus 1990 to 2010. It's already a nice asset. So there's not a lot of deferred maintenance, which is why the budget is lower. We're going to spend less on renovations, less on improvements, or WayMaker will do this, but we have a lower risk for execution. And there's millions of units that are available just like this. and we don't have the lost time of having to do 100 units renovations all within the first year to do this value add. So instead of taking 2 to 3 years to increase net NOI, it's going to be done in the first 6 to 12 months, which is immediately impacting our revenue from the first year. So with the real-time data performance, unlike I would say the normal operator can get, you have the ability to make these decisions and increase NOI in a much different way. So is there anything else I left out on this
No,
strategy?
no, very good. Obviously, this is not a new strategy. This is just this is what all REITs, institutional level operators are doing in the A-class space. We're now bringing this, or have the opportunity to participate in a fund that, because of their access to this data in these companies, can now bring this down to the B-class space. So that really is opportunity here. This is not a new strategy. This is what every large group is already doing at the institutional level, but we're bringing this down, or WayMaker's bringing this down, and we get to participate in
Yeah.
that B-class space.
That's a good point. I would say most of the time we just never see them, right? We don't have the opportunity to do the same thing they do. So we're the fine 9 cities. This may be a little kept you in suspense for a minute, but Atlanta, Austin, Charlotte, Dallas, Denver, Houston, Nashville, Orlando, Raleigh, and Durham. So these are the top sub-markets that have had these 9 metros. They've outperformed other markets since 2008. Faster growth, lower volatility, and that's why we're invested in these Sunbelt cities. Oh, also to point out, on the top of the slide, you see 90 bips, BPS. These are basis points. What this is, on the top of the next slides, you'll see where does our return come from, and each of these slides is going to break down where the return comes from. So 90 basis points, that is 9/10 of one one full interest rate of return. So if I see 90 bips, then that's where 0.9% of your return is going to come from. And this value add, just in the city, there's market appreciation of 9/10 of a return point. Okay. This next slide, you see 550 bips, which is essentially 5.5% interest, or 5.5% of return. If I invested 100K, then I know 5.5 of my percentage return is factored into just this value add page. The key tool set that we have will bring us the technology driven numbers watch, numbers improve, the revenue management, the real time optimization, our benchmarking from month over month, quarter over quarter, year over year. It basically, it's been proven, as Ellis mentioned, this same game plan is done in the institutional A-class grade investments. This is how they make money, but brought down now to a B and B plus class asset. So how do we know this is proven? The reason we can put, or WayMaker can put 5.5%, is because it's already proven and verifiable. So RealPage manages 4 million units today with some of the largest operators. We talked about them. Greystar is the largest. And this data isn't something that's being projected out of thin air. It's actually being done today, as Ellis mentioned, with RealPage. So the data is basically across that JP Morgan, Blackstone. You guys know Blackstone, I'm sure. If you don't, Google them. But this is what they're using today. I miss anything here, Ellis? Okay, so that's 5.5 percentage points just in RealPage. This next slide, you'll see 250 bips, or 2.5% of my return comes from Apartment Life. When I put them on, when they're on site, they're going to have a better online reputation. They're going to increase new tenants. They're going to ensure the community is happy. Existing renters have friends, higher occupancy. They're going to stay there longer. And this is exactly the benefit that you get from Apartment Life. I'm going to keep going through unless you have anything to add. If you feel need to, Ellis, just stop me. So on this slide, basically the Apartment Life, this summarizes the data points that we've just said. Anything we want to add before we just move through it?
Yeah, this just shows again the probability of renewal as from the tenant standpoint. The more people you know, the less likely you are to leave, and the more that adds to the bottom line for us as apartment owners, right? So that's simply all this is. It pays to have friends or be able to have a organization like Apartment Life who's helping people make friends, and they're really good at it.
Friends, I love it. Okay, so Ellis, why don't you go ahead and let me see. Are we talking about these green initiatives and potential technology upgrades? I don't know if we want to necessarily go off word by word, but it's they'll have this slide. You can check it out. Anything to add here?
No, yeah, again, I think it's um, part of the improvement process. These are really simple things that, again, because we're doing this at scale, we can implement some of these things that, again, maybe a single operator or even a couple hundred units may not be, hasn't done yet. And so just
Yeah.
again, the ability and the opportunity we have to participate in something at scale.
It's bulk bandwidth, bulk cable. Individual operators are gonna do that, but if we're buying 40 apartment complexes, across the span, we definitely have the ability to buy more. And then the potential green initiatives are, the utilities, the HVAC, the water, things like that. So this brings 1.2% of our return from the technology and green initiatives. And then WayMakers, check. So this slide, you'll see 1,500 BIPs. So this is one of the largest areas, which takes our low projected 10% return on your money. And then it goes, to 18%. We'll break that up. But how did we get a juice that goes from 17 to potentially 33? It's right here. It's in this slide. So you might want to pay close attention to this one. There's a proposed opportunity that we can go after: 50 to 100% reduction in taxes if we're buying these properties in the right market, or if Waymaker's buying them in the right market. So if it has a lot to do with the median income for the markets or submarkets. So the example here is Plano, median income 79 grand. If we take 60% or more of the families whose income is not 60%, sorry, they're making 47K, and we start taking a lot of that renter base, we're going to get a very big reduction in our taxes, which, if underwriting, that's one of the biggest areas of expenses that an apartment complex has in a year, which essentially just juices our return. And we're doing that because
For everyone.
Apartment Life is a nonprofit. Sorry, go ahead.
I was going to say taxes are the most important expense for everyone in the world, not just apartment owners. Everyone pays more in taxes, right? So this is the opportunity for us to save in taxes because of the unique team that they put together with Apartment Life.
Thank you for correcting me, because taxes are the biggest expense, on anybody's line item for their entire lives when you really add it up. So if we can avoid those, man, this is essentially the same thing where we're going to be doing. And it's not, yes, this is awesome, we can avoid taxes, but really at the heart of it, we're still impacting the community, because these are people that we're taking, or renters with a lower median income, and providing them really good quality housing at an affordable rate. And because we can do that at an affordable rate, they're giving us a bump in reduction in taxes, hopefully zero, which would be amazing. And so that's because Apartment Life is on. We're giving them 15%. We qualify, and we're going to make some change here. So this is basically the summary of those slides. We just went through each one. When you go back and you look through these slides, you can look through the data points. The BIPs on the left-hand side are the low projection. The BIPs on the right-hand side are the high projection. So if I'm following with my eyes, I'd look at annual return. What's my low? My core potential property brings me 500 basis points. The asset optimization brings me 300 basis points. 200 for Apartment Life, 70 for the technology and green initiatives. That's a 10.1% return on our investment that's projected. The right-hand column goes through the high side. So the high side is everything goes well. Everything goes as projected. We're making it, WayMaker made it very conservative for us to say, if I put 100K, what are you guys projecting on the low side? The low side is, a 10% return a year, which nobody's going to sneeze at, even 10%. But on the high side, you get, our investors are going to get through WayMaker 18% is the high projected. Now that's the blue mark. You see net value add, impact of core value add strategy, this blue line. Well, with the last slide we just talked about, 750 or 7.5% of return to 15% of extra return is the fact that we can invest in market dependent, tax credited communities where we get the extra juice of not paying or paying a discounted portion of taxes, and that takes us from 17% all the way up to 33%. So there is a lot of upside, a lot of potential to win big on this. So anything I missed here, Ellis?
No.
Okay, good. So what does this mean for you? On a projection, here's a pretty conservative note. If I put in 100K, how will I get paid a year? You can see over average of the years, over 7 years, it's a 6% cash flow. Most people would not invest in this just for cash flow. We're looking for equity. We're looking for net worth creation. We're looking for tax reduction as well. So overall, when you look at 7 years, you're looking at a 2.3x conservative estimation. If I put in 100, I'll get 230 back. Your 100K was your original seed. That's yours. Your return was 130K for this example. Some of it was paid quarterly distribution, so 6% on average. I received quarterly as an investor. And then over the long run, you'll see the big jump in year 6 or year 7. Where did that come from? When we exit, if we were to exit a 7-year projection, then that's where the return would come from. A cumulative return from 156K to 230K from year 6 to 7. The overall conservative 14% IRR is conservative underwriting again. And, overall, very good asset, very solid structure. And
that's not a bad worst case scenario.
Oh, go ahead.
I just want to say that's not a bad worst case scenario, right? Like,
no,
we're
not at all.
talking about a low risk adjusted return here. I think you're going to be pleased with this investment opportunity. But you could also be very pleased if, again, the things that we've shown, really do work out from a best case scenario. But this is not a worst case scenario by any means. That's why we're really excited about this fund opportunity and being a part of it.
Absolutely. We'll let you, unless you want to talk about this, but
I do.
maybe we'll let them. Go ahead,
I
Ellis.
want to say just a couple words about this because this is so unique. Again, even on our single offerings, we would not be able to provide something like this. And this is, again, just because of who we have access to. You are going to have real-time performance data that you can log in and see that the exact data, the same numbers that our boots on the ground operators of these assets get to see. And so, again, this is you don't see this at kind of the lower level management because you just don't have access to this. And so you as an LP will have real-time data on how all of these assets are performing, as you can kind of see here. Anytime on demand visibility into revenue, occupancy, net operating income, right? So this is pretty massive. I mean, we as a fund will be sending you quarterly updates on just how the fund is performing, but you as the LP will be able to see how the assets are performing as well. So this is just pretty cool. I don't know if you take advantage of this or not, but it's just great to be able to see how things are working.
Yeah, we'll definitely provide you summaries and updates as well along the way, as Ellis mentioned. And it's nice to have full visibility and transparency into what's happening, right? So let's see. Apartment life, a couple extra bullets here. I think we hit a lot of this, but I don't know if we hit this 4 million. They're currently on site. They do overall their total nonprofit. They do 1,000 community events a month, and they impact about 4 million residents. The part about impact investing, sometimes it's measurable and sometimes it's not measurable. Sometimes you donate and you don't really know if it made an impact. This is one of those measurable impacts because Apartment Life really looks at a lot of the data. How many people, how many communities, how many residents, how many events, how many people turn their life over, to Christ. So again, this impact investment is not just for those with a Christian faith, but if you have one, you're really going to appreciate the effects of their impact on the communities. So it's really awesome.
Yeah, absolutely. I mean, they track down to how many conversations, how many invitations to events. So really,
Yeah.
really amazing. And again, regardless of your religious affiliation, we believe that being a good neighbor is a good business model, right? And so if you believe that, I think you can get on board with this fund as well. So
Yeah.
excited about this opportunity in so many ways.
You'll see a couple testimonials from some of the apartment life residents as well, and some of the individuals. I think this summary slide is a good one to talk about too. Let me kind of hide my face for a second. What actually happens? Like, what's the timeline? So we've given you a timeline to invest or to commit into our fund, which is going to invest in a Waymaker. But really, what you're going to see here on the left hand side, Q4, which is right now, raising capital, looking for the first investment. What happens is 2021 comes out, and the goal is to buy 5 to 15 of these 20 to 40 million dollar, call it 100 to 250 million dollars worth of assets, and measuring it all the way down to even the spiritual connections per month, right? For apartment life. So as we're acquiring 2021, it grows. Call that 5 years later. The target would be $500 million. So the reason we said, 100, 150 million to $500 million is the target, 15 to 40 communities. These are very conservative numbers over this length of time for the team and the way we're buying the properties. And then somewhere in year 7 is where, maybe there's an exit here where we get cashed out. The fund can, the Waymaker opportunity or portfolio gets transitioned to a REIT. REIT buys it, they crush it, and they sell it like stock later, right? We're owners of apartment complexes, but later it gets sold as stock. Now, what happens if a REIT is not buying at that time? The Every single one of these assets, it stands on its own and has an amazing exit strategy on its own because of the low basis price. So there's not a risk of not being able to sell the whole portfolio. Every one of these can be sold as an individual property, just the same way it was acquired, just like normal. So plenty of exit opportunity here. This, goes over a little bit more. I think we summarized some of this up front, but source them right, find 9 cities, operate them correctly, make sure the technology execution across the portfolio is good, people managing the communities right, the apartment lives on site and on staff, asset management done by professional asset management, professional fund execution, really great legal teams, and scores of startup experience across our teams. This is Waymaker's projections. So again, we've been going through Waymaker's fund. I think we summarized that how we're invested into their fund, but this is the transparency they're given. If I was $1 million minimum investor myself, here's the terms that I would get from them. We have these terms on our mission of multifamily fund. So we're giving you some that are slightly different because ours are the fund. If anybody's listening, if you guys have $1 million, you can get in on these terms. Right? Did I summarize that okay, Ellis, or what should I?
Well,
How should I
no,
say
I
this?
would actually say this is for the outside investors that aren't part of Mission Multifamily Fund One. We actually
Correct.
have better terms than this because of our early access into this fund. So you see a management fee of 1.5% on commitment. Well, they're actually only charging us a 0.75. You see
Mm,
they're going to take 20% of the promote. They're actually only taking 10% of the promote of Mission Multifamily Fund One. So we actually have better terms. And so if you're wondering, well, how are you guys making money on this fund? Well, the answer is really simply we're charging the other 50% that they're discounting us. And so you are coming into this fund exactly like everyone else is too, like everyone else is. And that's because we're coming into this early. They've incentivized us to come into this early by giving us, essentially a half off discount on some of the biggest fees that they take. So again, they're transparent with theirs. We've made it clear with ours. And really simply, listen, we're here to help you and make wealth building really easy. And we think we've negotiated something really, again, no one else is getting these terms. Was because we're in this early. Is because we've been building relationships with these guys for really the past 6 to 8 months. And so again, I just wanted to make that really clear
yeah,
that our terms are actually a little bit, or actually a lot better than what this
that's
slide.
awesome. Yeah. So Super glad you pointed that out because that's just the fact, right? And these are the individuals that Ellis is talking about. He's been making a really good headway for them for the past 6 to 8 months, the past year. Which Ellis, thank you very much for making the offer and opportunities. And now we're all in together, so we're excited. And if you do have any questions or want to talk to them individually, you can reach out to them if you have questions, but try to direct questions to us about the deal, about our syndication, so we can do our job, which is manage the conversations. But if anybody does want to reach out, everyone's eager to help. So let's kind of leave our last slide. Sorry
If
for
you would
this.
go back to
Walkthrough
the
is right here.
Yeah, again, projections, we're talking about a 2.3x multiple over 7 years. I
Mm-hmm.
really do like what you said, Abel. You don't want to invest anything in this deal that you can't afford to not have, within 7 years. I mean, this is illiquid type investment here. 6% average annual cash flow, very conservative in the sense of the leverage that we're using. And then again, conservatively worst case scenario in some ways is a 10 to 17% return. That's including the exit. And then if we are able to take advantage of, some of these tax credits, we're talking a pretty big upside, and even into the transition of a REIT up to 33.1% return. So we really like that projection for sure. And then the last slide here, Abel, if you'd go to, again, just the call to action, the investment process, reach out to us. If you're watching this, then you have our information. If not, you can email me at invest@ellishammond.com. Abel, you want to provide your email as well really quick so people know how to get a hold of you?
Yeah, it's Abel, ABEL at 5tcre.com. So if you've probably gotten my recording, you're on my email list, feel free, just ping me directly. I'll give you a process. We'll provide all the docs, like we were saying, the offering memorandum, and happy to help. And then if anybody has any questions, let me know. And myself and Ellis, both fund managers on this, so very much a team sport and trying to help you guys get the best
Yeah,
opportunity.
process is super easy. Let us know that you're interested. We'll send you a soft reserve form. You'll make your commitment. Like I said, it's a $50,000 minimum. As soon as we get that, we'll send you over a DocuSign, which has our entire PPM subscription documents, and then you will sign those electronically.
Yep.
It's pretty simple. You will have to verify your accreditation status. You can do that at verifyinvestor.com, or we will also, when you send us your commitment, we'll send you essentially a draft letter that you can get signed by either your CPA, an attorney, or a registered financial advisor, verifying your accredited status.
Yep.
And then the last step will be to invest your fund, or to wire your funds. And we'll set up a call to give you those instructions, make it really simple for you. We're in this with you. And then let's start making money together in 2021. So again, the timeline is, our deadline is the end of December, December 23rd, or until this fund is complete, which is at $5 million. And so again, we're eager to get this done. Excited to have you with us. And so thanks for your time today, Abel. That's all I got, man. I'm glad we put it together.
Thank you very much for the opportunity. And because this is, I would say, the last note for me, because this is a Regulation D 506C investment, normally we would not say on a B investment, forward this to your friends because we can work with any other referrals. Well, this one, because it's for accredited investors only, because we can advertise. If you have any other friends, family members, other people that think impact investing is kind of the right way, or just want a great financial return, let us know. Send me ping me or LS respectively, whoever and send them to us, so that way we can talk to them about their terms. If they want to invest, they can too, because this is a Regulation D 506C investment for accredited investors. Essentially, we can advertise.
Like building wealth with friends and family. So it's a great word. Thanks, man.
All right. Thank you very much, everyone. Talk to you soon. Bye-bye.